Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello everybody, welcome to Power Trading Radio. Merlin Rothfeld with you for your Taco Tuesday edition, a Collapse Tuesday edition. And I do have charts for you all out there today. Yes, the updates were completed sometime this morning. Thank you, Bill Gates and Microsoft, for that one. And I did speak with my guest. Actually, I just got a message from my guest today. He will be on the show. We're going to talk currencies out there with Tim Pesut. So if you guys have questions, feel free to send those on in at powertradingradio.com. Click the little button there that says Power Blast. Those questions will come to us here in the studio. And we'll get to all those questions on today's show. All right. I didn't get to show you these charts yesterday, which is a travesty because the charts were amazing yesterday. Just wow. Today, even better. Now, the difference here is with yesterday's close, we had some target levels set in. Today, we just kind of continue to follow through. Now, I actually thought that we would see a spike up in the after-hours session, and we did, but it did not follow through to our market open. We actually saw it rally pretty good after the market closed, rallied about 1%, and then just gave it up and could not hold on to any market footing out there today, and almost everything. Actually, the top 7 we have today are all really, really bad. So I will work our way from the worst up to first place, which is kind of embarrassing. You shouldn't be down 2.5% and get the top spot on the podium, but that's what we have today. So let me start with the worst one out there. Russell 2000, that was our worst performer. In full disclosure, I told you guys yesterday I had puts on Russell, S&P, and the NASDAQ 100. I closed out half of my positions just because it's just, you never looked a gift horse in the mouth. This moved too far, too fast. You're talking significant gains in those options, obviously, for those who know how options work, in just a 3-day period, which is phenomenal. So close out half, still have 15 Russell futures, Russell's puts short for April. There's your chart. Look at that bloodbath. This dropped below that 50-period moving average and just has not looked back since. There's your 50-period moving average on this one. 2 monstrous red candles. Today was down 3.45% to 1,571 for the Russell 2000. Not sure why it's not showing me where it's at. There it goes. So it's at 1571 right now, which is right where that number I just read to you. So that's where we're at with the Russell 2000. The interesting thing is, if you look at a lot of these charts, and I'm hoping our viewers out there today will see this, take a peek at what we've ripped through, okay? So we've given back a couple of months worth, and in some cases going back 3 months worth of gains in just really 3 trading sessions for this Russell. But we've knifed through this area of demand. I actually thought we would see a little bit of a pause here right around that 1610, maybe 1600 mark. Not even close. We ripped through it, and then there was another area where I thought maybe we'd see a little bit of pop right around 1680. Nothing. Now, after this, you notice there really isn't much. There is a demand zone down around that 1510 mark. Other than that, there's still some room to fall here, but I just had to take some money off the table. That's what you saw for your 7th place finisher, Russell 2000, down 3.45%. And right now it's holding stable in after-hour session. I guess that's a good thing. All right, the other topic of discussion, we have a lot of really crazy things going on here. Obviously was the big sell-offs today in the equity indexes and some of the commodities, but let's take a peek at that 10-year Treasury note. This one is very noteworthy for a couple of different reasons. Now, we did have the Case-Shiller Composite 20 Home Price Index numbers come out at 2.9%. That was better than expectations by a good margin. Also, HPI data came out today, up 0.6% versus 0.3%. So housing markets doing very good. Maybe people refinancing and pulling money out to buy into this. That could be what's happening. Now, we talked about this 10-year Treasury note, futures note chart. Let me bring on our watermarks again. I see someone just asking for the watermarks. So we'll add those watermarks for you so you guys can see what we're looking at here on our YouTube channels. There you go. So we draw on this little kind of pennant formation here with these blue lines, which was compression. We made the statement that normally when it breaks out of this type of formation, it's in the direction of the prevailing or the previous trend, which was up. And notice what we've had for the past 4 sessions, just been huge move up in this 10-year U.S. Treasury futures note. That one, obviously, when you have this big rally like this, that means that the yields are falling. I wanted to show you the 10-year yields so you guys get an idea of this. We are at historic lows that we have not been since, the farthest I can go back is 1960s on this chart, and we have not gotten this low. If you notice back here in 2016, we were at, go over one to a little bit to the left, TJ, 1.336. Let's see, the low was 1.336 back on July 5th, 2016. That's the lowest we've seen that 10-year in my lifetime and some of other people's lifetime. It might be the history of the 10-year. Right now we're at 1.330, so we're at levels we've never seen before. Just to show you, I will scroll back through time. That blue line at the bottom of the screen shows you that 1.33, and you notice that everything is above it. Yes, for those of you who are live in the 80s, you had something up around 15%, my friends. That was gray. Now we keep going all the way back. Oh, we're in the 60s. Yeah, I'm at 1962, and we were back, right around 3.8%. So 10-year yield, I think, is a major factor for the housing market and cheap, easy money, which is fueling this to the upside. So something to keep an eye on as it progresses. As it drop even more, we shall see. That was your number 6, down 3.41% on that 10-year Treasury yield, as I mentioned, to 1.33. Okay, let's go back to Click and show you the S&P 500. Again, I close out half of my S&P puts today for good reason. I actually almost closed it out yesterday, as I mentioned on the show, but I felt like there was going to be more follow-through because of a couple factors, which I'll analyze here in just a second. Today's activity, you can see, actually started to rally a little bit, but just gave it up. Could not finish strong at all. Finished incredibly weak. On the day, you were down 3% again. You're 6% in 2 days. So for those of you buy and hold guys, you're saying, oh, it's okay, it's no big deal. 3% is no biggie. Well, add on 6% and erase 3 months worth of your gains in 2 trading sessions and tell me that's not that big of a deal. Yes, I know you'll hold on forever, but would you rather be making money in this big move down or losing the gains you had for 3 months? I know which side I want to be on. All right, S&P 500 finishing at 3,128 today. Now, what's interesting about this, I'm going to actually show you the after hour here for the S&P because S&P is showing some nice move up. It's about 10 points in our after hour session. See, we closed right there. We're up a little bit in the after hour session. Oh, sorry, we closed right there. So a 10-point move up in after hours, but nothing major, still down below this moving average, which is just a legacy thing I have on the charts here, 50-period moving average. All right, TJ, bring me back to the daily time frame, and I want to go to fourth place, which was Bitcoin. Bitcoin today down 2.29%. Actually, I think, let's refresh this. We may actually change the order here on the fly. Yep, we're changing the order. Fourth place, that's the NASDAQ Composite now. That's how quickly things change when you're looking at Bitcoin. NASDAQ Composite was at 98.65. That was a slide of 2.77%. What's noteworthy, again, about this is you can see here that the 50-period moving average on this one has been breached. I know a lot of people like to look at those numbers just to gauge what overall market sentiment might be. What I would probably be doing at this point would be changing that study just a little bit and looking at the 200 because this is something that mutual funds and hedge funds are focusing in for long-term investments. Now, one thing we've been talking about in the show is the elasticity of price away from moving averages. And you can see here, there really hasn't been anything historically that resembles the extension away from this moving average that we saw like with the NASDAQ. It was so far pulled away. And you guys might remember the analogy I was talking about with rubber bands around your wrist. Well, if it was this far away from your wrist, it might break it when it snaps back. Now, it's snapping back, but honestly, it still has room to go. I still think you could see this thing come back down to touch its 200-period moving average. That would be a long ways away. My guess is that convergence point would be right around 82.70 on the NQ, but again, that's a long ways away. That's about 600 points away from right now. Let's not worry about that. We've got a little area of demand right in front of us on this daily on the NASDAQ 100. On the day, as I mentioned, that was your fourth place finisher, down 2.77%, and we climb from there. All right, number three. See, I moved these numbers on me, and I'm a mess to begin with. Crude oil. Beautiful. This is such great technical stuff here. I love this chart. I wish I could have spoken to it more yesterday. This is absolutely gorgeous. If you look at this one, we had the shooting star on the 20th of February, and that was right into an area of supply. Had you gone short, followed rules, which is just below the low of that close, all of a sudden you came right back down. Huge move down in crude oil from that close would have been about $53.47. Right now you're down to $50.23. Now you are coming back down to this area of demand, which formed that double bottom a while back. Really depends on what happens at this level before you start buying right now. I'd be a little cautious. Just right now, I think that the entire world is in a risk-off mode, and I'll explain more about that here in just a second. All right, I've gone long-winded, but I need to keep on going to get to these top 7 markets. Crude oil was your number 3, 2.59% slide. That was when it was trading at $50.10, and it's actually up 10 cents in our after-hour session. All right, yes, let's go to gold. Surprise. And yes, Brendan sent in some great emails over the past few days. Definitely give you a shout out. It's interesting that you have the risk off, right? This is the risk off investment would be gold. Really getting punished today as well. Everything really was just getting punished out there today, except my puts. Gold, 1637 is where it finished. That was a slide of 2.36%. Not that good. There's your daily. Grand scheme of things, it's still going to be that risk-off investment. If we see these markets tank even more, you'll probably see some strength in gold. But today, I think, was just a sympathy sell-off with the global markets. Now, number 1 was Bitcoin. I know, number one down, what's it, 2.45%. So we've been jockeying back and forth, but it's number one or number two on the day. You have a slide of $235 or 2.45% for Bitcoin over the last 24 hours. 9,368 is where it finished today. Sad to see a day where 2.45% is your best performer out there. I'm praying that many of you got a chance to capitalize on some of this downside movement. The pain might not be done. I think when I was rambling yesterday on the show, when I didn't have any visuals to work with, when the main thing I wanted to get across was this just ushers in a whole level of uncertainty about earnings going forward, about trade, about a lot of businesses coming potentially to standstills depending on where they're getting their inventory from. I got into a talk last night, how is that the right word? A discussion with some friends last night, and she was a nurse and really got animated about how this is all about deaths, and it's not that bad. More people die of the flu. Unfortunately, it has nothing to do with that. It has everything to do with the uncertainty of the supply chain and disruption of global business. And right now, that's what's been fueling this market. And if you stop that, everything's going to come to a grinding halt. Now, I don't know if we're going to see that panic moment. I don't believe that today was a panic sell-off. You know why? Because it was pretty much down periscope all day like a 30-degree line. When we get a panic day, folks, when we get that doo-doo hitting the fan from airplane, you're going to see markets with just gigantic candles straight down intraday as the bottom, the bid, is falling away from prices as nobody wants to buy. I think today what you had happen and yesterday is a lot of people going, I am sitting on a mountain of paper profits. Let me lock in some. But unfortunately, there's not a lot of people out there buying right now. So a little bit more selling pressure combined with a little bit less buying pressure moves things down much quicker, and I think that's what we're seeing over the last couple of days. We will probably get, at some point, the bottom feeders coming in here and say, I'm still buying these dips. There are some good buying opportunities. It just depends, does that landslide continue and push even further, faster to the south side? We'll have to wait and see. Hopefully, those top 7 markets put some money into your pockets today. All right, we're going to take a quick break. When we come back, Tim Pesut will be joining us on the phone. We're going to talk about the global currency market. Since I did not get a chance to talk about those yesterday with some charts, we will do that today. If you have questions, send them on in at powertradingradio.com. Click the little button there that says Power Blast, and we'll be right back with Tim Pesut after a short break.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. It is your Tuesday edition. Shout out to all our viewers that are sending in tons of comments out there. We've got Ruben, we've got Liberty, hello, Big Eb again. We've got Dave, Mark, Brandon as well. Hello, everybody. Hope you're, and Medic Man down, welcome back, my friend. Hope you all had a good trading session out there. I know for some of you it probably wasn't because, a lot of people thinking buy the dips, buy the dips, buy the dips. Unfortunately, I think we might have breached some of those buy the dip points. Don says, Merlin, tell me you had some puts 1,900 points out of the money that you're collecting on now. I wasn't that far out of the money, but I was definitely, when I bought these, I bought them cheap. They were deep out of the money. And of course, when markets move 6% in 2 days, all of a sudden they become very in the money or very close to it. But it's the percentage gains that was really just jaw-dropping today for my options. That's why I closed out half of them. All right, today is a Forex day. Yesterday was supposed to be a Forex day as well. Scott couldn't make it on the program. But the good news is Tim Pesut is joining us today from, I have no idea where in the world he is at, but Tim Pesut, one of our resident experts on the Trading Academy. Tim, how are you doing today?
I'm doing well, Merlin. Can't ask for better days than the last two.
Well, I can, but I mean, beggars can't be choosers. I mean, for someone like myself who I generally perform much better in down markets, I haven't had too many opportunities over the past couple of years. You know, it's been slim pickings.
Right, exactly.
And today and yesterday are the days where you just kind of feel like hunching over and rubbing your fists together and feel like Gollum going, hey, my precious, yes, my precious. That's what I felt like the last couple of days.
Totally.
Look, you and I have not had a chance to talk today about what's going on in the Forex world. Anything noteworthy that you think might be worth sharing with our viewers to start?
Oh, you know, the dollar.
Yep.
So I was in a class last week, and I had mentioned on Wednesday, okay, we're entering the supply zone. The way it's behaving, it looks like it could go through that zone. It got stronger. The coronavirus was being talked about it, but it's almost like everything with the dollar in the U.S. was totally ignoring it. And I said on Star Wednesday, I said, don't be surprised if we start to realize what's happening. And the market starts to roll over. And then sure enough, Thursday was a little deeper in the zone, and then it came out. Market started to roll over on Friday. And then, well, you and I are living history right now, Monday and Tuesday.
Yeah. Yeah, you know, when you have a market like this, and I'm pretty sure you don't watch Power Trading Radio every day, so you don't get to be jaded by my perspective. But what are your thoughts when you see a currency, well, not even a currency, a basket of currencies? So this chart that TJ has up here is the U.S. dollar index, and of course that is the U.S. dollar against a basket of securities, mainly the euro. But it has moved a huge amount. I mean, the likes of which we have not seen, scroll back, TJ, since, we'll say the end of 2008 or mid-2018 is the last time we saw a rally that aggressive. Maybe you could argue September of 2018. But when you see something move that far, that fast, knowing that currencies don't show like 5-10% percentage point moves, does this cause warning signs for you? Or how do you brace for the impact of something like this dollar index rallying that far, that fast?
Well, first of all, you don't know if you're going to get a big pullback.
Right.
Now, when I see something like this, and to me, yeah, it's almost parabolic, but you've got some small candles there. I mean, this thing just took off, and I think it's just people's comparison that, oh, well, we don't have the problems with China. You know, things are going well here, and there was no real looking at, all right, you had all kinds of rumors, where did it originate, but take that out of the picture. When you depend too much on one area to be a major source of your baseline, they're calling it supply chain. Mm-hmm. But for our viewers, this is a fundamental place that's responsible for a big chunk of putting things together, what have you. And they typically at this time of year, a little earlier, they have their new year, which is expected. But nobody expected them to be shut down this long, and it was much more extended. And what kind of got my attention was, I think it was last Tuesday, there was some kind of blurb. I'm not a big news person, but this one kind of caught my ear, where Carnival came out and said they were canceling 3 cruises in China, not to China, in China. And they were going to lose about $3 million per cruise. I'm thinking, that's a little steep, but I don't know the industry that well. But I looked at it this way. You canceled 3, and I imagine you do thousands of them a year, and your margins are that thin, you're going to have an earnings problem. Then I thought, well, who else fits this category?
Right.
Where the margins are thinner than we think they are. And what if this goes a couple more weeks? Well, then that's going to spill over to the U.S. market now. Our things are going to contract. People are going to start pulling back. And people, I think, are starting to say, is the party over? And they just start selling. the dollar was way extended, went into that supply zone, looked like it was going to break out, and I think when this all came about, because we've been pretty much bulletproof for a long period of time, now it appears it's on our doorstep, and even though we might not get the virus here to the length that other places have, we're going to feel the effect because, you know, we had this big trade war with China because we do get a lot of things from China.
Yep.
Well, if you don't have secondary sources, you're kind of at the mercy of, you got a shortage. Now you can't sell things. You don't have sales. Sales drop. Earnings fall. Market corrects.
And I think it seems to be picking up strength. And I really want to share a quick picture. I know this is very tangential. I was actually supposed to be flying to Indonesia and Thailand the end of March. One of my best friends, I travel with him all the time. He's like the best travel partner in the world. He sent me some pictures. He basically flew out yesterday to, I believe, Singapore or Jakarta. I don't remember where, but I'm sure it flew through China. TJ, bring this picture up. Right. This is my friend, and props to Josh. Thank you for sending this one to me. This was his flight to China. Now, I don't know if you've ever flown to Asia, especially out of San Francisco or LAX, but there's not an empty seat on those airplanes. You wonder the impact here.
Everybody's stacked.
Yeah, exactly. And and you notice there's 8 people on this plane, and he said this was as they were taking off, like just about to take off, that this was the full plane. So people are just saying, I'm not going anywhere near it. Think about the ramifications here for things like United Airlines, Delta, American Airlines, anybody who has major revenue coming from flights to China and back, they're going to get slaughtered too. So it was interesting to see this because we hear about it in the news, et cetera, but this to me is boots on the street, if you will. This is one of my best friends traveling. I'm like, okay, this speaks volumes because I've flown to China before, and man, you're lucky if you find an open seat on those airplanes. It's nuts. So it could be very interesting going forward. Going back to that dollar index conversation, let me see if I can bring up that dollar index.
The dollar's been extended, and there's talk with the Fed that they may cut rates in March.
Yeah,
this may force their hand.
That was my next comment. We hear President Trump saying, "Look, the dollar's too strong," blah 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 blah. Whatever, whether you believe that or not, it is still the talk track. And I'll put this on a weekly time frame so you guys can see. We'll go back and just show me during the Trump administration, TJ. I just want to show you just the Trump administration. So that's 2016. Keep going. You're looking at right from pretty much there is how the dollar has performed under the Trump administration. You go back to obviously to December of 2016. It's actually gotten a lot weaker under President Trump. What was it, November something? It's a little bit weaker. It's probably about 101. Right now you're trading at 99 on the dollar index. So it's gotten weaker, but since 2018, a lot stronger. Obviously a stronger dollar is going to impact our markets. What do you think about this hypothesis that I'm going to throw at you as far as why this dollar keeps rallying? As John O'Donnell would say, in many cases, the United States is the prettiest girl at the ugly girl dance, which I think is just totally rude and inappropriate. But it is gaining strength, and I think a lot of this has to do with we have yield on our interest rate products, right? And we still have yields on the 10-year, the 30, the 20, and I think more people are moving international money into the U.S. markets to chase yield, therefore converting their currency to dollars, driving the dollar chart up. And that's my hypothesis there. Am I crazy?
I don't think it's a hypothesis. I think that's exactly what's happening.
Yeah, all right.
I mean, come on. You got Denmark, 3 months ago, that is now offering a 20-year mortgage at a negative 0.5%.
Right.
You still got to pay the principal.
Got to pay somewhere.
Okay? But folks are flocking it like, they're throwing money at me. They're going to pay me to take my house.
Yeah. Well,
no, you're just not paying interest. And who pays interest on a car loan anymore?
Yeah, and you're seeing the defaults on car loans go up significantly. Brendan, thank you for the correction there. He says, the U.S. dollar is the prettiest pony at the glue factory. There you go. That's much more diplomatic. Sorry for all my equestrian friends that are joining us today. How dare you talk about
horses? But the other one I have heard, by the way.
Okay, so good. I don't feel
you were on that. I've heard that before.
Yeah. I haven't made up my own yet. I should at some point make up my own. Let's see.
Freshly painted house in a neighborhood that hasn't been painted in 20 years?
Well, that's my neighborhood.
There you go. See?
All right, so there's the thoughts on the dollar. I got a couple different questions coming in here. We were going to take breaks, but TJ says, I don't want to do breaks today. So I said, okay, fine, won't do breaks today. Heath yesterday sent in this one. He said, what's your thoughts on the Aussie? Do you have a buy point for the Aussie? So bring up AUD USD, TJ, and we'll show that on the daily here. The viewers out at home, you don't need me to give you an opinion. My opinion is pretty simple. You know, if you look at this chart, what I would tell you to do. But Tim, I'd like to get your take on what do you think to do with this Aussie dollar?
Well, the Aussie dollar is kind of having it's hitting a little bit of a bottom. I say as this develops, potentially goes lower. I mean, I know it's coming up into an area of demand. I just, you're talking about the World Health Organization considering this maybe a pandemic,
right.
And I don't think they've been hit that hard. But I think to the degree that China has slowed, there's more room on the downside for the Aussie dollar.
I agree.
And the Kiwi.
Yeah, Heath, I wouldn't buy it. I know this is what goes through our heads, and this is one of the biggest challenges we have to face as traders is the discount theory, right? You go to the store and you say, well, and Sam, who loves to use this analogy, you go there and an avocado is $3, but then all of a sudden you see it and the avocado is $1.50, and you're like, wow, I can get twice as much. Well, is it going to go to $1? Is it going to go to 75 cents? The trend is your friend until the bend at the end. And if you notice, this Aussie dollar was trading up around 70. Now you're down at 65.80. I don't see any real reason why this should stop here. If anything, it might have a little pullback up to a more recent supply level and sell off from there. When we zoom out here, there are some demand zones that go all the way back into 2008 and 9. Those may be impactful, but look what it's done since 2011. It's been nothing but down. So don't try to fight this trend and say I'm going to buy and pick a bottom. Don't pick a bottom. It's a dangerous thing to do. Instead, I think you should be looking for shorting opportunities on the Aussie dollar until this trend is broken and tells you otherwise. The problem people have is they don't want to leave money on the table. They don't want to be late to the party. I would rather be late to the party and still have some fun as opposed to get there way too early and there's just nothing but boredom going on or I'm losing money along the way. All right.
Totally agree with you. I don't see anything really coming into play till around that 63.50 area. It's got plenty of room to go.
Yeah, I think it could drop a lot further from this point. Let's see. On the Trading Academy's page, you guys are kind of quiet out there. Send on some questions for Tim and myself. We'll get to those. Brendan says, I've lost way more trying to pick tops. Yeah, I've lost as well.
That's right.
But I think, Brendan, and you're probably getting better at this. And I love that you send me your comments on a regular basis. Don't take my lack of responses. I don't appreciate it. I just don't have time to respond to everything. But one of the things I've read from our viewer Brendan is he's been becoming more in touch with his risk management side of things and the importance of stop losses. And you stick to those. So it's cool. Pick tops if you have to. That's okay. Just be ready to get out of the way when you're wrong. Like right now, picking a bottom, I would say is the right thing to do for these equity markets. However, you could be proven wrong very quickly because right now we're dealing with an emotional marketplace that's selling off rather quickly. So, Harrison, I like your comment, but I don't know if I could read that one on air. Let's see. Rajwan says, do you think that with the U.S. election around the corner, is Trump going to pump more and bigger QE to prevent a major crash?
He can't do it. The only people who can do it is the Fed.
Right. But he can badmouth them. He can be like, "Oh, you guys are incompetent.
Yeah.
I'm going to fire you if you don't do it." So yeah, it's all.
That's a tough one. We don't know to what extent it's going to impact things. QE.
Yep.
I don't see that initially. I would say they'll lower rates, and if that doesn't work, sure. I wouldn't say that QE is off the table. They could easily do that.
Yeah, I would agree as well. I think QE is definitely on the table, and you have to look at that dual mandate of the Fed. I think at this point they're going to do whatever they can to not have a systemic crash or a market crash. And I think if you go through and talk to my colleagues, all these traders, they would say, look, we have a 3-tiered bubble. You have an equity bubble, you have a housing bubble, you have a bond market bubble, and we could probably point the finger at other asset class bubbles. We don't know when or if, let's say we don't know when that is going to come crashing down. It will at some point. All bubbles implode, which is healthy because it creates great buying opportunities for those that still have money left. The key is to make sure we have money left. That means managing your stop losses when things start to fall apart. Broker Sosa on Power Trading Radio's YouTube channel says, thoughts on USD JPY. So let's go USD JPY. You're looking at 111.94. Caught a nice short at the supply level. Wow. Okay, that actually is pretty, excellent. I have to say, a good trade on that one. TJ, put that horizontal line on 111.94. That's a pretty darn good trade. Okay, so 111.94, there you go. We've got that one mapped out here. I'm a fan of it. That's a great trade. I like it, and you're being rewarded right now, so I don't know what else I could say on that one. Tim, what are your thoughts on it?
Stay with it. Make sure you follow it with your stop. Because one thing, this could, it's highly correlated to the S&P, and it could retrace really fast.
Yeah, the only thing I'm not a huge fan of on this one, Broker Sosa, is just what the U.S. dollar has done, what USD JPY has looked like, right? If you go back into 2013 and 14, it's been, it had some huge moves. Now, of course, we could make the argument that the trend we saw since mid-2019 has been aggressively to the upside, but it really looked like a lot of consolidation there. Now, here's the daily. You had that real big spike up. Okay, and this is one we talked about in the show. We actually had people asking about where the potential target was, which actually we had a viewer yesterday. Where was that? I have it here. We actually had the numbers on the screen yesterday. Leo yesterday was saying, I have a buy order in on USD JPY at 109.88, and I actually suggested you go a little bit higher to the 110. And the reason is exactly what happened today. You saw that it hit a low of 109.89. One tick. 1 pip above where you had your order out there, Leo. That's why you want to go a little bit higher sometimes with those round numbers. All in all, I think your short is good on this one, Broker. However, you are in an uptrend on this USD JPY right now going back into mid-August. And I think that what you'll probably see is this pullback, which came into a demand zone, will probably stop here and start to move back up. So if you were short on this one, I would be very, very keen on locking in some profits, if not all of those profits. I know it's hard to get out of a nice winning trade like this, but what are your thoughts on that one? He's got a great short here.
No, I agree with you. He needs to have a tight stop because, again, this is all anticipation of what could happen. Hasn't happened.
Yeah.
And typically, I'm with you. When you have that really sharp pop and you have that really sharp drop, oftentimes that zone's strong enough that it'll start resuming the trend. As I see, prior to that big pop, it was still going up.
Yeah. A couple quick questions here. Dave on Power Trading Radio's YouTube channel says, if my trading hours are after 6 p.m. Eastern time, should I strictly trade Asian market, or can I, during the week, put trades on using other non-Asian pairs and set and wait?
Set and wait. You've got quality zones. A lot of times traders are like, I got to be there to see it happen. And actually that's a problem for me because then I have a tendency to tinker with it.
Yeah.
And he's got, by setting up, let's say, trades in the London session and New York session, he's got the two best sessions where there's the most activity, where I'm okay with I call it set and check. It's not set and forget because some folks really literally just set and forget it. No, you want to check in on this because you had a huge move today. And then it had a huge pullback.
Yep.
And that shook the trees quite a bit. So tight stop. And Asian markets, the biggest thing is they'll usually take their quick 15, maybe 10, 15 pip pop. They'll just hang there. And a lot of folks are attracted to it because they have that nice move in that first hour or two, especially around 5:30 Pacific time. And then they're like, okay, well, I've got momentum, and then it just stalls because it's waiting for the European session to take over and see where the London traders are going to take it.
For the viewer out there, I think you have, at least at this point, as traders, we have amazing tools and resources out there that allow you to not be forced to trade just the times that you mentioned. Everybody that's on the show today is probably working to some extent, and if you are, there's a window of time where you probably can't even look at the markets because you're stuck at a desk or doing some job. Look, set and forget orders are a blessing. You just have to understand them and trust your analysis. And I think that what you should be doing here, Dave, is a lot more set and forget orders. As Tim mentioned, it removes a lot of the emotion from the equation. It prevents you from getting wrapped up in making these impulsive decisions. So if you trust your analysis, you trust your setup, you know that your risk and reward is appropriate, right? You're not going to risk a lot. You're going to be trying to obviously make, let's say, 3, 4, 5, 10 to 1. Then you map out those trades and go to sleep and don't worry about it. Or while you're working, let the computer execute these things for you unemotionally based off of the plan that you had in place. So I think you should be doing more of the set and forget orders. I think it's a great way for people to remove the emotions that sometimes become crippling and can make you make some really bad decisions in the marketplace. Tim, where are you at today, by the way?
Minneapolis.
Minnesota.
Well, it's not so much Minnesota. They don't have that much snow, which is totally opposite of last year. It was bitter cold.
Yeah.
It was a couple feet deep. Actually, you see brown grass.
Wow. Okay. Well,
Yeah.
Well, did you hopefully get to go out? And I think it's the land of 10,000 lakes. Is that right? I think that's what they say.
Yeah, but I think they're partially frozen, and it's just better in the summertime.
All right, so you're teaching in Minnesota
I'm
this
not
week.
an ice fisherman.
Yeah, one time I want to do ice fishing. It looks hilarious. You just drill a hole in the ice, grab some beers, and put a hut around you with a heater and go for it. What's your teaching schedule look like? Where are you going to be headed to next?
San Jose next week.
All right, awesome. NorCal, my neck of the woods. Well, awesome. Well, thank you, Tim. I appreciate you coming on today. I hope we get more continued volatility like this. I like the exciting shows.
I like days like this. There's other folks that are just holding their heads. They're like, and there's some folks that are in the fetal position under their desk right now.
Right.
And that's why you got to understand how to work both sides of the market, because it's an equal opportunity offender and rewarder.
Yep. Absolutely, and this is where those that get stuck in one side of the equation, either exceptionally bullish or exceptionally bearish, they get smoked. And certainly some people got smoked. Some bulls got trampled out there today. It was the running of the bears on today's session. All right, Tim, thanks so much for joining us. Enjoy the remainder of your class. Shout out to all your students out there in Minnesota, and I hope you have a great day.
All right, great. Thanks, Ramon.
Right, take care. Because that was Tim Pesut of Online Trading Academy, one of our Forex instructors. If you guys are Online Trading Academy graduates, remember you get free retakes out there, so go back and schedule them. It's on a space available basis, so contact your local center. He mentioned he'll be teaching up in San Jose. Would encourage you to check that one out. Tim's got a lot of Forex experience and always just a great sense of humor as well. You got to like education with some entertainment as well. It makes the education process that much better. All right, let's go take a look at what's cooking for Wednesday, February 26th. Our economic calendar out there doesn't give us a ton to work with. You can see it's kind of flat. We have new home sales. Now, today we did have new home Case-Shiller Composite 20 Home Price Index. Tomorrow, you have new home sales and crude oil inventories, which will be interesting since we're right at a demand zone on crude oil. New Zealand has trade balance and ANZ business confidence numbers, and then Australia with private capital expenditure. Moving on to your earnings calendar, there still are some companies out there reporting earnings. Lowe's companies, Bookings Holdings, and then this is TJ. This is where he just gets me in trouble by putting on some company with some bizarre names, trying to get me to mess up on the pronunciation of this one. Bear with me, folks. I'm probably going to embarrass myself right now. My German heritage is going to get very upset with me. We have, Bayer hat keine Gesellschaft. Was kind of close. And let me try that. Let me try it one more time. Bayer hat keine Gesellschaft. There you go. Very good. And then we have TJ Maxx companies, Crown Castle, and Marriott International. I just went Arnold Schwarzenegger on all of you. I don't know why that happened. It's just the Bavarian in me came out. Apologize for that. That's what's reporting earnings tomorrow. There are other ones that will be reporting earnings tomorrow as well. These are some of the major ones. Of course, I'm not so sure about Bayer Aktiengesellschaft. Our guest for the show for tomorrow will be Tilly Allison. She is one of our resident experts on a wide variety of different asset classes. She's a long-term investment expert. She is into options and futures and Forex, and she's just all around an amazing person. She'll be our guest on the show tomorrow, talking about strategic investing, really that longer-term approach, which may have some of you rebalancing your portfolio right now. Of course, once this week ends, the monthly candles on the monthly chart will have closed, and that may paint a very different picture for some of you with regards to your long-term investments. So we'll talk about that tomorrow. If you get to the chopper. Oh, God, you guys are great. So if you have questions for Tilly Allison or myself, feel free to send those on in at powertradingradio.com. Click the little button there that says Power Blast. You can get those questions to us anytime that you like, 24 hours a day, 7 days a week. And, of course, if you like today's show or our guests, give us a little thumbs up on our YouTube channel. Until then, happy trading, everybody. We'll see you tomorrow. Take care.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.